been running since 2018, and we are, I believe, the city's largest and longest running community meetup, and we're dedicated solely to education. So we host these events once a month and have amazing speakers who come and teach us about something relevant and topical in the industry. So how many of you guys have been to Crypto Mondays London before? Raise your hand. Hello, nice. Okay, and how many of you are brand new first time? Wow, okay, welcome to the dark side. Just for a little bit of background, Crypto Mondays is a nonprofit organization, so we very much rely on the generosity of our supporters to help us host these brilliant events. So I just want to say a really quick thank you to our supporters, ICT Hub UK, Vault 12, London Blockchain Conference, and of course our host this evening, Google Cloud. So really quick, I would just like to invite up on stage Keith, who is from ICT Hub UK, and he's just going to give us a quick word. Hi Keith, let's welcome him. Hi Keith.
Thank you. Hello, how's everyone doing today? Good? Okay, amazing. Nice to meet you guys. My name is Keith. I'm COO of ICT Hub here in the UK. We have lots of hubs globally, all across the globe, but I'm the lead of the UK. And we're in the middle of doing a really large hackathon at the moment. We've made a really big goal in about a month. We've done the largest developer onboarding in Web3. We onboarded a whopping 11,500 developers. So if you're getting a quick cheer for that, yeah. And as you know, basically all of the hub leads were busting their backs getting that done. So anyone who's building, looking to bridge support, or even looking to meet more people in Web3, please scan this QR code here on the screen and join our community. We do lots of different giveaways, lots of different online engagements, and it'll be great to see you guys there and meet you there as well. So yeah, that's me. I'll be short and sweet. So thank you guys. Take care.
Thanks, Steve. And another great supporter of ours is Simplicity Group. So if I could just get Alex to come up here real quick and give us a quick word. Come on, Alex.
Thank you very much. Nice to meet everyone. Hello. I'm Alex, co-founder of Simplicity Group. We're a economic advisory firm, and we do a bunch of other stuff. But what I wanted to show very quickly today is we made our economics template public, which includes all of this good stuff, which is your supply, your valuations, your investment schedule. But there is an additional few pages which you can't see here, but you can see over there. Yeah. And within that, you have things like launching your token, having the TGE supply pressure modeled out, some liquidity modeling, and a bunch of other good stuff. It's free, completely free. I know on here there is actually no link or anything to get the template. So message me and or chat me after, and I'll send you the link. But this is what we use for all of our clients, and I think it's the best template that is currently out on the market, especially one that is completely free. And the reason why we made it free is so that every founder who can't afford a economics consultancy firm or anything like that at least has access to something that is complete garbage. So, yeah.
Okay. And then really quick, we don't often super promote ourselves, but Crypto Mondays London has a bunch of massive activations coming up in the second half of this year. So if you or your company is interested at all in working together and collaborating on anything, please scan the QR code, fill in the form, and we will personally get back to you. Some very exciting stuff coming up in October for sure. Happy to chat about that. Without further ado, our lovely venue host, Google Cloud, I'm very excited to introduce Emma. Emma, come on up. Welcome. A little bit of education on a Wednesday. That's fantastic, especially in the summer season and holiday season. We are really proud to be supporting. If you are interested in the Google Cloud Startup Program, actually, how many founders do we have in the States? Okay, great. Oh, fabulous. If you're interested in joining the program, please scan this beautiful QR code here. And then that will bring you to one of our team members and we'll get you on board to the program if you are eligible. And I look forward to hopefully seeing some of your faces in the future. Hope you have a really nice event. Thank you so much, Emma. And without further ado, I'm very excited. So welcome back to the stage, our moderator, Alex. You want to head on up? And the rest of our panel, we've got Tom, we've got Natasha, we've got Charlotte, and we've got Paul. And I'll let them introduce themselves.
Yeah. Do you start? So, welcome everybody once again. Today on the panel we have a wonderful set of guests who will introduce themselves one by one, very briefly, and after that we'll get right into the questions because I know the time is limited. So,
Yeah, hi everyone, I'm Tom Rose. I'm the Chief Legal Officer of GAN, which is a GBP stablecoin issue I'm sure you've all heard about. We're starting launching in October, September, October, and my background, I'm a regulatory lawyer.
Hi everyone, I'm Natasha. I'm from BDNK, VP of Results and Strategy. I take care of the results team and the first line of defense, so that's everything financial crime intelligence, financial crime onboarding, and automation. BDNK is a enterprise-grade stablecoin payments infrastructure business. So if a business wants to enable themselves or their customers to send, store, convert, or receive stablecoins, you call us. Hi everyone, I'm Charlotte with BDNK. I'm based here in London. Thank you for having us tonight. If you're not familiar with BDNK, and business is well known for its service business, that uses buy and sell cryptocurrencies with traditional payment methods like revenue, PayPal, Venmo, you name it. And we've recently been making strides in stablecoin world by Aaron, stablecoin business. Very excited for the conversation.
Yeah, thank you all for coming. I'm Paul Howard. I'm the director at Winston. We're probably the biggest crypto company that you've never heard of. A reason for that is we run 800 million AUM. We turn over about 2% of global crypto flow every day at a height of $7 billion. And we're trying to make a bit more of a public space for the business, which is why I'm here tonight.
Great to have everyone here. And once again, I'm Alex, the founder of the Group, advisory firm, economics, launches, and a bunch of other good stuff. So, the first question for all the newbies here, if you can, someone here can define very briefly what is a stablecoin, so mention the minting, redeeming, general, stablecoin, or resources.
Simple issue, yeah. Stablecoin is a token issued on chain to a small number of customers, representing a currency. So most stablecoins are USD. We're issuing a GBP token, and the customers who it's issued to, they can redeem it back to their initial purchase price, just one-to-one, and the issuer puts away backing assets to make sure they can fund that redemption, and then it's a transferable sort of bearer asset, which means it can be transferred tier to tier to people who don't necessarily have that relationship with the issuer, and that's where it gets a little bit different to things like bank accounts and money, because those non-customers don't necessarily have that access back to the issuer for redemption.
Yeah, maybe just to add from like the infrastructure lens, and just highlight that especially with stablecoins, you get the benefit of the stability of where you're backing it by, take this, USD, but then also the transparency of a digital currency. Maybe from a user perspective, we've been able to send information for free, globally and instantly for decades now with emails and messages, and that hasn't been the case with money. Stablecoins now enable you to have the true internet money that could power the rest of every other system that we used to. And in the world where everything is instant, waiting for 3 to 5 days for international transactions to clear is a little difficult for most businesses and users.
Right. I think in that case, just to kind of continue on that point, we're going to skip a couple of questions and go back to them later. But on that point, how can we control the power that the very few stablecoin issuers for the dollar, euro, leading global currency, the power that they will gain considering that they're private, unelected entities controlling, in essence, our new medium of exchange with the power to freeze these return stablecoins?
Yeah, I mean, it's a big question because the monetary system we have at the moment is massively controlled by governments and regulators. So obviously banks issue your money in your account, but they're heavily regulated and they're all connected into payment systems, FTS, CHAPS in the UK, and they are sort of operating through connections to central banks normally for settling payments. So it's all very carefully sort of controlled and overseen by regulators and governments. And the sort of new world is where you've got your Circle, your Tether, and they're operating on these global chains, without the same level of oversight. I think to answer the question, I think the way we see it is possibly slightly overstated, the kind of power that these issuers would have. The model is obviously to issue one for one for the local fiat currency, so it is still tied back to the existing system to some extent, and then the kind of competitive advantage or the reason why people would be attracted and use the stablecoin is for its stability and its simplicity. So there's really kind of every incentive to not do anything unusual or exercise any kind of control or power over your customers or your users. And I think those kind of competitive dynamics really push issuers to try and work out how they can be almost the same vanilla in their stablecoin as they possibly can be.
So there seems to be competition, just general capitalistic market dynamics. You're saying that a stablecoin issuer will be incentivized to act correctly on
Correct, yeah. So I mean, I suppose it depends what the sort of exercise of this power, would be. But the issuer itself, rather than the users, I don't want to go into the type of things that some stablecoins are used for. They are more accessible and more transferable. So yeah, USDC has a lot of use cases that are not the sort of traditional financial services, but the issue itself and the product itself is not out there trying to exploit people. It's just trying to be a relatively simple kind of product. But I think it's a massive concern that the regulators have. So we're constantly in discussion with the regulators about the hot topic at the moment with what's happened in the US is whether or not issuers are going to control too much of, for example, public debt markets. So if already I think Tether and Circle are enormous holders of US public debt, and there's definitely concern. We've had it ourselves direct from the regulators about whether issuers are going to be a kind of risk, sort of point of risk for public debt markets, whether you might see a big crash in public debt markets if there's an enormous redemption where the issuer needs to sell a load of the public debt, which is the short-term gilts are the products that are typically used to back because they're the safest, most liquid asset. And again, I mean so it's a legitimate concern. I think it's probably only concern when you get to really, really enormous scale. And then even then there are money market funds, there are banks, there are people who have similar power.
Also, it was easy to express the original question, which was we're finally starting to see real regulation in some of these key markets, and where we haven't even really touched, what Genius can do, and we had Genius here, we were, very keen to be, you can find the details as it came out, because it gives you the rules of the game in which you want to play. And if you want to remain, a company that is innovative in that space, and you could argue that you want to give the tech companies the power to do what they do best, then they can be counterbalanced by the regulators and some of the markets. Yeah, I think the reality is that only in a world where stablecoins can completely exist in silos, that's where the concern obviously gets to like 100%. But for us as like an infrastructure player, we know we're still dependent on banks. We're still dependent on card issuers. As soon as you have to plug something into that system, that's when now regulators are going to come into play, and there's other people involved, and so it's a lot easier to start looking at regulators to start coming in and saying, okay, what's happening here? So I think trying to find answer, regulation is how you're going to control it.
Yeah,
and it's welcome, right?
Yeah. And they have regimes for it. So in the UK, the bank lending regime, it's not been that popular, but the proposals are very strict for when you reach that systemic risk level, and they have a similar regime in other people. Okay, so yeah, the Mika and the Genius Act are very, very interesting. They all do. The Genius Act has a lot of regulatory points when it comes to USDC and in America. So that will make sense. And I think kind of bounce back from what you said earlier about competition. Everyone, from our clients, for example, there's a lot of startups from the we work with, and we know that stablecoins are the new shebang, right? With everyone launching stablecoins, how can anyone actually compete with USDC and USDC? Fundamentally, what our clients do, no one's going to use stablecoin. We have them with rather than doing it with USDC. So, to kind of bring it back to what you said earlier, the competition will naturally incentivize the behavior. How can anyone actually compete from the perspective of the market, products, and all that?
Yeah, so you've got about 90% of the stablecoin market is denominated with USD as a base currency at the moment. And if you look at the FX market generally, it's about 83% is USD. So there's a room for other stablecoins to, for example, have a European currency, stable currency, and so forth. The market to be expanded, and I think when you've got Tether and Circle dominating that space at the moment, where does the new incumbents come in? And the second part to that is how do you profit from it effectively as retail? So I think the first part of that question is you're going to find use cases for stablecoins, which is why we're seeing so many pop up now. You've got, for example, Agora, which is being used by Banex and other like mainstream asset managers. State Street, you have Franklin Templeton. You have a lot of these big TradFi houses using it for their internal settlement systems, saving them on cross-border transaction costs, etc. And that, I think, how you grow the stablecoin pie is not by USD and Circle increasing, Tether and Circle increasing their amount that they're doing necessarily, but the pie will grow bigger. You'll have new incumbents coming in, a lot like how the derivatives market will grow in options and crypto. It's not that, a derivative, suddenly it's like 90% market dominance. Their dominance will increase, but their profitability will increase because the market pie is getting bigger. So it'll be the same stablecoins, and the reason they will expand is because there will be new use cases for them, whether it's an internal system for settlement counterparties like State Street, or whether it's like USD1, which is launched by the WLF, which costs. That's something that the US government will then leverage for their payments, and for example, like tax billing and so forth. So you're going to find new markets for stablecoins, which will grow that and increase the competition in that space. And the second part, how essentially you or I could, let's say, profit from that is probably a lot of these stablecoins will have frictional costs when suddenly the peg moves from 99.9 to 99.2 or 98 or something on the dollar. And at that point, that's where your low bids get filled in the market, and then you sell that when you rebalance that trade, 30 minutes, 3 hours, 4 days later. So I think if you can just stick in what they call think bids, like
well below where the market is, then there's a chance you can make some money there, and similarly sell those at a higher, depending on interest rate, because you've got 30 plus institutions now launching stablecoins in the last 6 months. 4 or 5 of them are going to have to go belly up.
There's no reason that I think we forget how early we are in this space. Like 5 years ago, there was a total amount of stablecoins in circulation of $10 billion, and 5 years later, it's $280 billion. It's as if you said to my face that they were cornering the social media market in the early 2000s. There's new use cases that are going to keep coming out. We'll probably end up, to your point, with a few dominant players in the market that will have the majority of the market share. But as we develop these new use cases, you can have anything from treasury stables to new use cases and new entrants for niche use cases that will develop themselves. So I don't think that should deter anyone from trying to innovate in those.
Yeah, my main concern is, for example, if you launch a stablecoin, you need to then partner up with Aave or make a DAO or whatever else, but your stablecoin is actually used outside of your own project. But I suppose you're right in that if there is a niche enough use case, then it's going to sell. Okay, so. And, that's what market makers trying to do from the business stuff that's useful. I think to kind of extend further on this point, do you guys think that stablecoins and wallets will completely replace bank accounts and fiat? And what will be some of the implications of that for retail users in general, macroeconomics as well?
I think it was a rounding at the beginning of this. And so our CEO, Ivan, said for 2 years now that wallets will replace the bank account. And that's more from the perspective that the way that we're using money is changing. We used to have physical wallets that held your coins or notes, which have now moved to digital accounts. We have digital bank accounts, and most of us have apps on our phones and don't hold anything in our pockets. If anything, it's our phone and our card that proves that we have a right to spend that money and it's legal in this nation. We can now move to a world in which you have a wallet address in whatever application layer you want in front of it. Anyone can use it in any jurisdiction, and you can send money for free, instantaneously to anyone across the globe. Which I think we're often quite privileged here that we do have the bank accounts that we're talking about here. But there's 1.2 billion people in the world that are unbanked, and 75% of them have a mobile phone. So they have a great chance of leapfrogging that stage that we're currently in. And even if, we're saying that we have all the apps and can send money for easy between us, sure. But I've had a few examples of my child not going through on holiday somewhere and a friend having to pay for their card or cash and then having to pay them back. I've done that with stablecoin successfully, instantly, and for free between my Monday app and my friend's spending app using stablecoin. And I think that's the true use case there.
Yeah, I think to add that on more like the retail side, the point that 1.2 billion people who are unbanked, but even more that are outside of access to USD, right? The stable part of the stable coin actually means a lot to a lot of individuals around the world. We have currencies that are subject to hyperinflation. One of the use cases that we are growing quite a lot in is payroll in third world countries. From third world country myself, so I definitely understand like one day things just seem way more expensive than they should be just because of the inflation system. So I think that just that access to USD changes the game for so many people around the world. And then secondly, on the bank side themselves, just the infrastructure, right? Their own ability to manage their own liquidity across the world. Just having that infrastructure layer, it will be significant contribution.
Yeah, I had another reason, which is just that even just domestically, stablecoins are safer than bank accounts. So that doesn't matter to a lot of us with things like financial compensation schemes and general trust in the kind of regulatory and banking system. But even in the last few years, banks have failed, even in the UK, and people do end up without access to their money and potentially without their money. And stablecoins are a safer business model with 100% liquid asset backing. is something that, it's a hard sell at the moment, but, it should become clearer and more accepted over time, that it's a better way to do, transfer the whole cash, for some institutions especially, and then if you want to add the functionality on top of that, then you've got a safer and a more functional type of money. So the reasons for doing it are there. It's just that it's dead inertia.
So all three of those fantastic answers, but they were all from the perspective of the retail user, which kind of leads on to the follow-up question of how will the banks, the government, etc., how will they, do you think, respond to everyone starting to have wallets and using stablecoins, which are tracked KYC, but at the end of the day, debt, banking, fantastic business models for everyone, including the government. So, how exactly do you see these two completely different worlds flying?
Well, I think first thing I read was quite interesting on X, which was that the whole sort of bond debt ownership from the US is being moved on chain, and like how that was a bad thing. But in my head, like if you could earn like guaranteed 4 or 5% yield on a product, like a treasury bond yield, then actually putting those debts in the chain and getting the so-called crypto bros or whoever it is buying that debt, then they're earning yield. I think that's really great. So I think what will happen is that you'll see more and more real world assets. And I don't talk about like real estate and cars and shit like that. I mean things like bonds and money market funds, like moving that on chain, I think is going to be really helpful, not just for the crypto, but also for the national debt of countries. Because all of a sudden you're able to transact that stuff a lot more widely. And I think if you're an issuer of sovereign debt, I don't think you should care too much about who's got it. I mean, like China owns most of the US's debt already. It's like, isn't that our enemy number one? So yeah, this version of that, moving that stuff online, having other people own it, KYC of these people, that's important, I think. So yeah, all positive things. I hope we see more of that stuff moving online. Yeah.
Yeah, I think we'll get into that. Like one thing that people might have always said, someone can use like a $5 note and roll up some campaign method and then go to the corner shop and buy candy or whatever, and then you deposit that $5 note. They look like this is clean money, right? Yeah. Compliance is fun. You can't do that on the blockchain, right? These are the conversations that we have with our banking partners on a daily basis, like educating them on what we can see on chain analysis. And sometimes it's actually a little bit of a double-edged sword, right? Because people are sort of like, okay, cool, like how far back do you go? How many hops are you going back? Because we can see initially terrorist financing and then it hopped 700 times and then got what? What do you do with that? You say like, okay, $6.99 is how far back we're going. So just that access to that information, if you're really do want to know your customer and know where their funds come from, like it does get better than blockchain. And
we've had when naming names, but we've had loads of interest from UK banks and like the big institutional asset managers who are sort of last. They're very slow moving. Obviously, they're some of the last people we might expect, and I don't know how much of it is out of fear that they're going to get left behind, but they're also recognizing all those benefits, and they do understand. Then they've got some people internally who do actually know how to get their heads around.
So in essence, with stablecoins, the sort of main issuers, they buy debt to the government in the UK, and the government will also track everything. Okay. There's a very good all on board things from that.
One of the angles that they push a lot is that it would harm credit creation. So a stablecoin issuer is not going to be able to use the capital that it holds to back assets as sort of backing for creating mortgages or creating new money and holding those kind of illiquid assets. They just have to hold in a short-term debt or cash at bank. And so if everybody starts holding stablecoins instead of bank deposits, then banks are potentially less able to do what they do in terms of credit creation, which is a serious kind of economic point.
Yeah, it should have been out of business years ago then.
Yeah. Right. I don't disagree. They have to compete to keep customers to offer better interest, current accounts that pay any interest, so they can compete to win that business, and they can compete on safety, they can compete on functionality. It's a good competitive pressure. Okay, fine. Well, from my side, all the interesting questions are done. I can ask about how micro and Genius Act regulations are, what they mean for stablecoins. It's always like to find out from our guests here. Otherwise, I think it's a good one to do the Q&A section. If you have time. Yeah, I can do. I mean, I guess in the question, how does micro regulation and Genius Act regulation over in America impact stablecoins?
Regulation is good. So, really, it just takes away the gray zone. So looking at like NITA specifically, so pre-NITA, obviously, so NITA regulates crypto assets in the whole overview. Pre that, there was a lot of fragmentation. Obviously, the EU applies to different countries. They were all doing their own thing. That means you could also, sort of play some regulator arbitrage, figure out who was going to treat you better, and having just that like clarity across the EU, number one, but then also having, the increased oversight. So previously you could sort of have like a VAT registration, which is you just saying, hey, I do crypto, and I have an AML policy, versus now being under the regulation of the European Banking Authority. That's like a completely higher standard. That means that the bar for entry is now a lot higher, right? You actually have to invest in your compliance, you have to invest in your compliance policies and your frameworks. You're going to be regulated by the same regulator that, regulates banks and, exchanges. So that also then means that financial institutions are a lot more happy to interact with crypto, because now they understand where the guardrails are. They understand what they can expect from you. They understand that someone is actually checking in on you every 2 months. So, from a European perspective, that's fantastic. The Genius Act does effectively that on the US side. I think our own previous experience was that it was almost damn near impossible to get a banking partner in the US. And, in recent months, that has significantly changed because they can now embrace it. They now know what the guardrails are. And yeah, they understand what standards we are living up to. So yeah, definitely a good thing.
I think MiCA's 10 years out of date. I just think it's trying to regulate a system that's like, it's trying to bring a system into a whole, like trying to tell Stone Age man how to listen to a CD. Yeah, it doesn't have a CD player. So I think the next wave, like what we've seen recently, are people like Revolut, institutions like BVNK, like revolutionizing access to digital banking systems. I think what we're going to see in the next 10, 15 years are banks that are built on the blockchain, executing in stable coins as their primary kind of thing. And that's not going to require any regulation. Do you think the Genius Act is more the Genius Act, I think, was a bit of a better implementation of MiCA, but again, I think MiCA to like help traditional institutions go on board onto this asset class. And the question is whether regulation can actually speed up in the sense that it will be able to regulate something that is always looking for a way to not be regulated. So you think it's too much? Like that. There's so many options out there, right, with the internet. So it's good for traditional players. Genius Act, I think, is the kind of like a great thing for the US, because they've had so many years where they've not had a creative culture around that whole space. I mean, it just seems like, if you look at like Lagarde's comment, like she's an anti-crypto person, because effectively it's a competition to her entity. And like these old entities are still trying to exist in a world that are no longer relevant. You've got a fiat currency that is basing in inflationary. It can't go on forever. So yeah, the Genius Act was reversing the positive step. Still, it was a regulatory step that you take an opportunity and found that this was not the right initiative. Yeah, I think it's going to I mean, we're talking to the regulators at the moment all the time, and we unfortunately that it's already done because they've got the opportunity. Yeah, they're all good. But the Mika, in these discussions, Mika is normally how being a town not to do it. Because it's yeah, of course, and but they've and also time will tell, maybe it'll look better in 5-10 years, but what it's very strict basically. So they, to give an example, they've said every holder of a stablecoin has a direct legal right to redeem with the issuer. Now Tether, that's just not how stablecoins work. So Tether is kind of issued in the tens of billions, hundreds of billions, and it estimates it has hundreds of millions of separate users, but it has fewer than 1,000 customers who can issue and redeem. And with Circle, it's kind of similar numbers. And that system works. You have a secondary market, and you have an ecosystem where there's liquidity, and that's the issuer needs to make sure that that's operating properly. But if you made all of those people, if you gave them access to Tether, then Tether would have to kind of KYC on demand. And under Mika, for even as little as redeeming €1 or $1, you've got to listen to somebody's KYC request, you've got to onboard them, you've got to work with them, and then you've got to set up a bank payment channel, and you've got to send them their $1. And it just, so Tether said no, obviously. And Circle created something that does work. But they've, I've talked to my regulators that, but they have, it's a bit of a farce because what they've done is they've just created KYC and onboarding and redemption processes that are so burdensome for the user that nobody will use it anyway. And they've also restricted some of the transferability that something like USDC or USDC has within Europe, and that's for that reason and a couple of other reasons. So Genius is very light to touch in some of those areas, and we're trying to explain that with the UK. They have got an opportunity in the UK to get it right, and the FCA, the guys really do understand it, so they are they give the impression that they're listening. The Genius Act mainly obviously focuses on regulating the actual issuers themselves, whereas things like Micah also touched on regulating the issuers with regard to the end user as well. Okay, so does anyone else want to?
I think that's the point, to be honest. The thing is, with the flows, just having regulation and knowing what the rules of the game are, for an industry who's been building the plane has been flying it for years, even any kind of clarity of what you can and can't do and remain innovative and competitive in this market is welcome for this year, and we'll see what the regulations come through in 0.5 like 5-10 years. But from our perspective, just knowing what we can do, pretty great.
Yeah, I mean, like the point that you made, a lot of us are trying to build on what exists already, and therefore you have to have the rules of the game so that they will let you play. But where you can play in your own world on your own, and you can control directly on the blockchain, then right.
Yeah, and the UK is a bit behind. If they can put that, then it's a big absence of any regulation, and I think we're only getting the conversations we're getting at a gap with some of these heavily regulated institutions because of things like Genius, and people start to understand Mika, and the FCA has proposed very detailed regulation, and those things help people get confidence.
All right.
Thank you very much for the lovely.
Is it on?
I'm curious if you think that algorithmic stablecoins are finally dead and buried, like Terra Luna.
There's kind of no reason why that, like logically why that should have broke. It's just the fact that they didn't have the, like assets behind it, right? And family took it down. Don't know if that's something in mind, but we let them in money to do it. Bitcoin, yeah. That was what mine. So I think like algorithmic stablecoins are okay, they should exist, and there's no reason why they can't. It's just that they don't have the capital. Like if you think about a large hedge fund like I don't know, Citadel or somebody, right? And they want to just corner the market and Tether and just short the hell out of Tether. Like $60 billion to bring Tether down. It's totally trash for the crypto ecosystem. Like Tether's not an algorithm stablecoin, but the fact is that once you get people trying to like make money out of it and try and like do things like that, they're quite nefarious and just trust themselves, then you're going to end up with a situation like that. So stablecoins, algorithmic stablecoins, I don't think they've got a future, unfortunately, because they're just very, because it goes just back to basics, like how much assets are actually behind it, I think.
One day, expand some of the regulation.
That's the lawyer.
Yeah. Pretty sure that was genius.
Yeah, I think you have to, I think for example in the UK you have to follow a certain audience to hold like 60% of your backing is cash at a bank account, and I'm sure it's not really, if you're claiming a peg 1-to-1, yeah, I think they're probably not compatible with you.
Yeah, it's like that with a genius out, you count all of your money and well, there's like 7 different bullet points, and then like 3 additional ones, so it's all should bet and stuff. So I think by nature of that.
Paul, don't tell me you work at a working service. I'll be very embarrassed.
Did anyone else have any questions?
Hi everyone, we're Timmermans with Bolt 12. So I've had a front seat in things like the Decoding Act, kind of watching that go through the market structure bill. I've also had a back seat, although blindfolded with the FTA, facing backwards and going in the wrong direction. You're a European thing. So I want to make a point, and then I have a question. The point is that with things like the Genius Act and several bills before that, it wasn't the regulators that, were the momentum behind it. They didn't just come up with this stuff on their own. There was a huge coalition between the industry, which we have here in the UK, but also in politics. So with the politicians, with all of the kind of that whole sort of ecosystem of staffers, senators, and Congress people. They do not see that. I spent half my time in the UK. I do not see that in the UK. And I don't know what it was like in Europe. It was like pointed out. But without that sort of that political momentum, it's going to be really difficult to get the FTA. I'm sure that the people who are working through all the paperwork, they're great and they understand it, but there does not seem to be any vision in the leadership to get this done. So I'm wondering what the panel thinks about, or maybe people in the audience think about, what is it going to take to get that engagement on the political side? It doesn't have to be the government of the day. It has to be a bunch of people that start talking about this, and start talking about it in terms of prosperity for Britain.
I think so what we're seeing is the tone is changing already in the UK. The bank agreement is very hostile. They've got good reasons to be. I mean, they are tasked with monetary stability, financial stability of the overall economy, and so they're very suspicious. But even there, the tone is changing a little bit. The Labour government is way more supportive. At least, it's the noise it's making. And it's been putting some pressure on the FTA, and so the conversation has changed a bit. The will is not there in the same way it was in the US, but it's changing. And what we can do, obviously, is keep explaining this is what we're doing, is keep explaining the way things work and the fact that the risks are not as high as they think they might be. But the other thing that helps is just that it's not gone away, and actually it's shown itself to work. You know, USDC, USDC have been remarkably stable through all kinds of market, situations. So it's hard to ignore it, and that's the kind of conversation we're having with the industry and regulators that are seeing it.
Anyone else with a question?
Thank you. So my question is regarding like a few companies such as USDC, setting up their own blockchain with Plasma and also USDC, planning to do the same with Arc. What's your thoughts on that? Do you think it's a net positive for stablecoin? I think previously there's been a bit of worry with USDC, but I think their kind of actions going on in part is maybe trying to address those things. But yeah, I just want your opinion on it because I feel like things are becoming a little bit too fragmented, and how does that set a precedent for, other organizations that may want to set up in space if everyone want to repeat the same things? I don't think it will work kind of in the bigger picture. That's what I'm expecting.
Well, I'll jump in. Yeah, I mean, Tether, like, they've got their fingers in so many pies that, like, a lot of these things that are popping up, they're invested in already. But I think it's positive to the whole environment. Yeah.
Yeah, it's going to be more competition and new use cases as well. As people are trying to sell their own stablecoins, new use cases for different markets as well. We'll just see how it evolves, but I think the fragmentation point for now, we're just seeing a lot of it in the news, and we should let it unfold for a little bit.
Okay, we'll do the last question over here on this side of the room.
All right, thanks. So what's your thoughts on Isana, the USDE, which I've done my own research?
Oh, yeah. Sorry. Yeah, we skipped that whole thing, didn't we? I was going to blast out about this. The biggest short trade in Ethereum right now is being run by Steam.
So, yeah, thanks for that. I didn't mean that. I just wanted to make sure I wanted to catch it. So, I've just been doing my own research. Obviously, it's first on the market cap on the USDC. So, because it's categorized by regular crypto, what kind of value proposition do you think will be down the line? Obviously, because it's not backed by a stable fiat currency, and obviously the fluctuation with BTC and Ethereum right now, what kind of value proposition do you think we'll have for the consumer down the line?
Well, yeah, maybe someone else might like to answer. I don't really see it as a consumer-led stablecoin. If you're not familiar with the theme USD, it's a kind of yield play online, where people are earning ridiculous yield on this stablecoin. I don't think it's got many use cases outside of that, so let's see how that ends up in the deal.
Was that it for questions? Okay.
Well, maybe, I don't know, I think.
Oh, here, one more here, which one here?
Hi. My question is, USD has been deflating this year. Do you think the dominance of USDC and USDC will be affected, and will that give more competition to other stablecoins?
GBPA is the one that we issued again, and yeah, I mean, one of the arguments, one of the criticisms as well that we get is that we USD, but the dollar, has its pros and cons, and for a lot of people having access to alternative, solid currencies, it's becoming more attractive, and we're definitely seeing the market.
I think the reality of it is stablecoin flows and which fiat currency are underlying these in question are a reflection of real economy in the real world. That's always going to stay roughly similar. If real fiat currency flows ended up changing to your question, then I'm sure we'll see different demands. But right now, we're seeing the majority of just being USD denominated. That makes sense.
Okay, guys, let's give a huge round of applause for our panel. There's one more question about it, I can find it later, although it's going around. Thank you guys so much. Before we break for more networking, I just have one last final announcement. Guys, if you could take just 1 minute and